Okay, guys, welcome everyone around the world to this weekend seminar. And as always, we're going to try to do the best to make everyone understand why we see that can take place during the next 5 days of trading, or 6 days of trading, better say. Okay, so in the review from last week, the market was around here at the opening. We told everyone, you guys can watch the recording, that the fade on the dollar should be, in other words, the fade of the market should be faded, and that the dollar should be bought. I mean, we on the service, we were expecting a little more downside, but like the market's been playing games with every technical trader over the last, I don't know, 2 or 3 months. It's unbelievable how this market is giving you the cycles, but it's not finishing at the right level. So, in other words, I mean, I believe that traders should be a little more aggressive in general, the way the market is right now. Well, now, this is the idea that we're going to present to you guys today. As always, first, we're going to go with the market correlation of each pair related to the dollar. And then we're going to go with some individual analysis on the dollar. In general, the seminar is to give you guys an idea of what the market is going to do. No individual pairs. Like, it's going to be more on the general things. So this is the US dollar and the low. The low happens to be on May the 4th. And saying there, the Elliott Wave, why you have two scenarios for the dollar. Either this is a three-way correction that ended on October the 2nd, or this is a nest to the outside. There is nothing more, guys. Or if it's a tree, can be as a part of a leading diagonal also. Or the scenarios that we are presenting on the daily chart, when all you guys can see that this can be still part of the wave 4 triangle, this can be a bullish leading diagonal, or this can be a W when the S wave taking place. But those are long-term charts that we are going to trade in those time frames. So let's not worry about the next move, and let's start worrying about this. Unfortunately, this move right here is related to the overall structure, and that's why I'm presenting it here. On the overall structure, how you're going to fit this move. If you guys remember, around July the 22nd area, around this low, we were calling for this move to happen. It was very clear that the dollar, around October the 2nd, it was very clear that the move in risk is going to happen. We got the hint at that moment based on oil. You guys remember that, right? At that moment, looking at oil, we knew that a recovery in risk is going to happen. Now, the question that the market is letting us with is if the whole correction to the move, to this whole move, for me at this stage, it was very clear that the market, it was correcting the move from May the 4th to October the 2nd in a three-way move. Now, if this is enough, well, if you're going to play a little bit with the Fibos, you draw the conclusion that the dollar passed a little bit at the 618, the euro dollar stopped at the 618, that was the 142.50 area. Now, that's going to give you two ideas. If this is A, B, C, W with a flat, and then this is W, this is a three-way move. That's what we put in here, a three-way move. And then this can be enough. And then you are zooming in the market, and you draw the conclusion. When you get here, you say, okay, if this is enough, it needs to go bullish to the outside. Bullish means it needs to see a clear five-way move to the outside. So what do we have? I don't see the clear five. So, and then it gives you another option. If this is A, B, C, and this is either one or W into an ending diagonal, a leading diagonal, of a B way or a C way on the triangle in the dailies and the weekly, this do not need to be corrected. So getting to that point, and now getting back to this point and see what we have from here. Well, from here we can have three scenarios. The first one, that this is A and we're still correcting the W, because that's the whole thing. It's not bullish to the downside either, because this is a three-way move. So that gives you the option that this is either the whole correction, which is S or 2 in the leading diagonal, or this is A into the correction, and we are right now on the B way to, like it is right here, another C way coming in. Now, what is supporting that scenario? Very simple. I want you guys to look at this structure here, this structure here, and this structure here. Don't you guys look a similarity between all of those three structures there? It looks very similar, right? At least in my eyes does. The US dollar is doing that structure every time that it's creating a temporary topping. You can look right here again, right here again, right here again. You agree? That's what I love about my good friend and preferred client, Rafi. Very similar structure. So that's telling me that we are close to the top in the dollar. But as a trader and as a server, most than everything, I mean, I cannot deny the bullish scenario. I mean, I cannot deny the bullish scenario. It's the same structure on the treetops. So, as you guys know on the service, since Thursday, I believe, we were calling for that the dollar was creating a temporary low or high. We say right here that it's going to create a temporary top, and it looks like it wasn't enough. So, and it recovered, and the draw was corrective. The same we here. Now, let's see the WSYF scenario when we are on the B way. Now, that scenario, you have to correct this, because B wave, as you guys know, are related with the S wave. This is the daily chart. I'm going to move it here a little bit. I'm going to open it up a little bit so you guys see it better. Look what's happening, and this is more outside of the Elliott Wave. This is a technique that I always use. What happened at the 50% retracement? A drop in the dollar. What happened at the 618 retracement? A drop in the dollar. Now, what do you think, guys, going to happen to the area that we've been pointing out for a while around the 78? Exactly. What you should expect it. We will mention the area around the 78, 46, 79 area as a possible top in the dollar. Why? Because one thing for sure, that from the lows, you can see 1, 2, 3, 4, 5 swings. There is no 5 swings correction in Elliott Wave. So technically, most likely, you're going to see a move here, and you're going to see a test of the high, of another high. And then that's going to make a 7-way swing coming out of the lows. If this is the scenario when we're going to see, when we are in a double zigzag from this area. But I want you guys to notice at the 50%, at the 618, and at the 76.4, it has been a drop. That means that big money is looking at the same scenario that I am. They are just playing games. That can be the case. Now, I want to point out that this is the biggest correction out of the three. That being the case, this date, which was 11/10, the whole market did the same scenario. What they did, it top, bottom, or create a temporary top, a temporary bottom around the 618 of the previous leg. Now, let me take this move, this FIBO, and let's put the extension in here. I mean, on the dollar, it wasn't so to the point, but it was at the 618. This is not a five-way swing, only because the idea that this swing is bigger than this one, so it cannot be a 5. So, like we pointed out right here, this is either a three-way swing, like we are saying, when it's going to do this, and it's going to drop right here, when the dollar is going to top around 78, 60, 79 area, and then it's going to rally and break the October 22nd lows. That's been our preferred scenarios, as you guys know, for over the months. When 142.50 happened in the euro, we all knew at that moment that the rally, we were pointing for the rally to be corrected. And that's been, and that will be our preferred count. Now, we have to, as a service, give you the alternative for the count. So each one decide with his personal bias which one you guys want to go. Now, which one are the alternative? And then we're going to prove some points going into the market correlation. Which one are the alternative? A triple nest to the upside. How are you laboring Elliott Wave? Why? 1, 2, 1, 2, 1, 2, and then the dollar needs to skyrocket to the upside. I don't like that scenario, and I have my point. And when I go to individual pairs, I'm going to show you guys why. The other scenario is a very good one. It's as good as the one pointed out for this move, which is the one that is a nest with the wave 2 being a flat. You got 1, and then you got 3, 3, 5, and then right now we're going to go lower in wave 2 or wave 3 of 3, and then the dollar should point it out from that there. Now, in my humble opinion, is either this with the 666 or the dollar needs to break lower from current levels. So that's why today and tomorrow is so important. And I'm going to explain you guys later how you guys need to trade it and how you guys need to see it. So in that way, you guys do not stay out of the market. Any questions so far? Do you guys understand which one are the two favorite counts? It's either A, B, C, W, S, and then A, B, C, and a rally, like Rafa is saying there, into Christmas against the dollar. Now, the other one is 1, and then you got 1 here, you got a flat 2, and then you got another 5 and another 2, right? This move right here is questionable. The dollar makes, and this day right here is a key day, and I'm going to show you guys now why. Now we're zooming in, and we're going to go in 2 scenarios, and we're going to make the case for each one of 2 and get to the conclusion to which one is the better one or which way you guys should trade this market, right? Now, let me zoom in a little bit, and let me get back to the daily chart. Let me take some lines right here so you guys do not get, now let's start with copper. Or you guys know that copper is Dr. Copper, and it's Dr. Copper is because of a reason. The reason being is because Dr. Copper, it's a say whatever goes copper goes the rally, goes risk. Copper down, risk off. Copper higher, risk on, right? Let's put copper on it. And then, if you take a note about the copper chart right here, you can see that May 4, copper top like Aussie, CAD, New Zealand, they are top at the July 27 area. From there, you can see a very nice correlation. You see, copper lower, dollar higher. Copper higher, lower, dollar higher, and so on and on. Now, let's take the dollar for a while and leave the copper there only by itself. Sorry about the days because I cannot take it away. Now, what we have in copper from the highest print right here in this area, we have, I like it like a flat. We have 3, 3, 1, 2, 3, 4, 5. It's a clear three-way move. Guys agree about it. Now, I believe that copper is correcting this move right here, completely correcting this move, which it drove me to the idea that we are in the ABC correcting that move in copper. You have to take the FIBO from here, and you can see that the correction has not reached. Anybody lost the sound, guys? Question, anybody has sounds? Yeah, so technically, I'm saying thank you, guys. It's Rafi, you are the one. So technically, we are correcting in copper all this move, which made me to believe that he have to do a three-way move higher in risk, right? Now, if we get back, all you guys has an experience already how the market is tricking everyone and how the market is not giving you the FIBO levels. Like, think what happens to us last week with the long euro trade at 134.40. We left out of the market for the 200 trade for 2 picks. That's unbelievable, but well, that's how it is. Now, thinking about it, this is a three-way move in copper. Now, let's say that we want to call this correction in copper completely. What we need to see behind is what matters. Now, let's go a little more in copper, like at a 4-hour chart in copper, and see how it looks like. It looks like that the recovery is corrective. And it looks like it is ABCWS ABC. You see the similarity with the dollar, right? If I put the dollar there, you guys are going to see that is almost the same chart. Look, from the top, same chart, same day. Look, you see that you have 5 swing down in copper, 1, 2, 3, 4, 5. You got 5 swings out in the dollar, 1, 2, 3, 4, 5. All right. Now, the dollar can be bullish. I don't disagree with it, but copper is telling me here that we're gonna have probably another move here, and copper is gonna trade higher. Don't you guys agree with me in that one? You agree with me, Isa, in that one? All you guys. Rafi, you see the same, right? I mean, that's telling me getting back to the dollar on the daily chart and pulling the dollar about the copper. Exactly. I don't know about it, but I know it is that. That's telling me that most likely the dollar is going to enter into the C-way, right? And that's supporting the scenario when the copper is going to trade higher here and the dollar is going to trade lower here. That's my preferred scenario as a waiver, to be honest with you guys. That's my preferred scenario in the waiver as a trader. Now, let's take copper out and let's try to see the rest of the correlations. Now, let's put the most clear pair in the whole market when it comes to the dollar. Okay, this pair is the Singapore dollar. Let's leave the Singapore dollar there and see what happens. Now, The Singapore dollar bottomed on July the 27th. From there, it did 1, 2, 1, 2, 3, 4, 5. There is very clear five-way move right here. Now, this low in the Singapore dollar is the 618 of the whole move. Now, it gives you the same answer if this is the B way of the A way. Now, it's very hard, in my opinion, to count this in Porsche. Only a five-way move can be the case. All right? Now, let's move on a little bit in time with the Singapore dollar, because we know that from here we have a three-way, so the only thing that matters to us is this. If this is a 5, if this is a 3, if this is a leading diagonal, from here, what it is. Putting the RSI is giving me already an extremely bearish divergence, which is telling me that the Singapore dollar is going to trade lower sooner or later. The sooner the better, in my opinion. Now, remember this day that I say is key. This day, I'm going to take the laboring out, so don't crowd too much the chart. And I'm going to put the dollar on top of this. Now, what you got? What is that? Let me see if anybody, you guys can see what is the difference here. Anybody guess? What is the difference between the two? Okay, Rafi, what is the difference? Okay, exactly. The difference right here. Why? Because if you're going to get back, I don't want you guys, drive you guys crazy with it. The US dollar, you can count as a triple nest. 1, 2, in 3 ways. 1, 2, in 3 ways, or 5, questioner, and another 5. But you cannot do the same with the Singapore dollar. Why? Because when you put the Singapore dollar on top on it, guess what? The Singapore dollar didn't make a new low compares to 11.8 like the dollar did right here on 11.13. That's very interesting. Why? Because that's denying the triple nest scenario. The same with the Norwegian krone. The dollar technically was the only one that makes the new low. The index was, the US dollar index was the only one that makes the new low. So technically speaking, the move from 11.8 to this high that comes, this day is 11.10 right here. That move is a three-way move in most of the US dollar pair. So zooming in, you take away the three-way nest in the dollar, and that gives you with idea of, remember that we always been saying that this is a question of a 5. So that gives you with idea, exactly, no triple nest. This is for me like it is A, B, Z, and this is W. And then we got 3, and we have A, B, Z with another highs coming in. Now, also, it can be 1, A, B, Z in a flat, 1 and 2 back. You follow me, right? Now, let's put the RSI in place. Okay, that's going to be the only bullish scenario that I see in the dollar is 1, 2 and a flat, 1, 2. You want me to put it to the euro level so you guys understand it, or you guys are euro dollar trader. It's like the euro to 37 and change, 37 and 20. And then from there can go higher. That's the only bullish scenario that I see in the dollar. Now, cable, let's get to cable. I don't remember the label in cable, the number in cable. It's like a 159 change, I believe. Now, technically, that's the only bullish scenario on the dollar that I see. I got to be honest to you. If that's going to be a nest, he's going to respect this channel, most likely. Now, what that scenario is supported by two scenarios. It's supported by the RSI, very well right there. When you can see this. In an RSI, when the C wave goes below the point of the A wave, that's most likely a flat in some degrees, or the truncation on the C wave. That happened here. So the 1, 2, 1, 2 can be in place, guys. Do not think it cannot be in place. It can be in place. I do not have any doubt about it. That can be in place. Now, I don't have nothing that deny that other than copper. Copper is denied that scenario very well. So my advice to you guys using the correlation here is that the dollar, that should be the best scenario. Now, it's very tricky. I do not deny that. It's very tricky. I have to tell you, all you guys, it's very tricky. But I believe this, that you have to play the dollar until the dollar prove you wrong. Now, I'm saying all you guys this. Do it using Elliott Wave aging. I mean, I know that. I mean, I don't use the Gackling, but I know that the US dollar with the sweeps is finished also a 5-way swing in favor of the dollar, I believe. I don't follow it anymore because I don't like to follow manipulated pairs, even though everyone is manipulated. But the money is too hard to make, to be in one position and comes a bank and take you away your whole account. I don't like those type of pairs. So that's my humble opinion. I don't recommend it. I know it's a great pair. It used to be a great pair, Rafi. But with those manipulations for the Bank of Sweden, man, it's hard. I know people that lost a ton of money in those manipulations, and that's not nice, in my opinion. I mean, so technically speaking, I know that either from current levels or from another high, the dollar is going to get weak sometimes at the beginning of the week. That's the message, dollar weakness. I mean, exactly. So technically speaking, that's my whole point. Now, let's zoom in a little bit long. Yeah, even if it's a nest. Now, this is what I'm going to show you guys, and I'm going to go to the dollar for a second, but instead of using the closing line, I'm going to use right there the candlestick. And it goes like this. This is the candlestick on the 60-minute chart on the dollar. It's known already. I don't think so. It's known already that from here to here, we did a 3-way move. Look, 1, 2, 3. No question about it. Now, what this loss is the 50% retracement of the move that we did last week from Sunday onto calling from Sunday onto Wednesday night, early New York on Thursday. Now, what's happening? If risk nesting to the upside, most likely to get into the wave 3 of 3, which is the most bullish scenario, is not my preferred one. I think that he's going to do something like this. go lower, and then going from here, in my humble opinion. But if it goes from current levels, I believe that most likely it is in the double zigzag, and it's going to go to 70, 78, 80, and that high should be favorable, guys, with everything you guys have. I got to be honest to you guys. Now, I don't saying that you fade as soon as you see a new high. You need to be smart about it. Why? Because that's what Cooper is telling you. And if you put the 4-hour chart, this is how you need to see it. You're going to get this point right here. Look. One second. Let me go to the 8. Look. And you got to be smart about it. You got to wait for the market to get to you guys. I don't say, yeah, something. Listen to me, guys, in particular, Isa. I cannot deny that the wave 3 of 3 can be in place. You agree with me or no? I cannot deny it. It can be the case. 1, 2, 1, 2. All I'm saying is that if it goes right here, you have to be smart. If it goes right here, before breaking this high, the first leg of the move is corrective. Don't you agree with me? So most likely what's going to happen is that it's going to end it around the 618 here, around 76.34, and then going higher, either in the 303 on COY. You follow me? That's what I think. Now, the next always respect like a channel in both cases of the scenario. That's why I'm favoring the idea of this idea. That's what I'm thinking is that my favorite count is that we have A, B, Z, W, S, A, B with a B done. We have 5 coming out of the low. My recommendation, buy the dollar tonight if it gets right here against the low to a possible move like this. You follow me? Now, right, what I'm saying to fade is if you see that this high take place around these levels, 78, 80, 78, 70 in the dollar, the channel is being respected, and most about everything, the RSI, it keeps supporting this divergence that is taking place. You should bound, you trace a trend line here, and the RSI should be testing at that time the trend line. You should be a seller and fade and move after you identify the 3 of the C. That's, yeah, exactly. You are the best, right, Isa? You are the best. My preferred count is that we break October the 22nd because of copper. But because of the S&P, it's telling me that we break and we're going to go there now. Now, I'm trying to tell you guys how to play the market. Nobody has the holy grail to say what's going to happen, and try. And sometimes I fail. Sometimes I lose like that. Sometimes I fail. So I'm trying to play the market the smartest way. And the smartest way is this, that in the short time frame, I see 5 ways here. So either to C of B or to the 3 of C of Y, or the 3 of the bullish case should be bound. So what we see is the momentum is lacking. We see a repeating structure, and we see bullish scenario in copper. So copper is calling for another leg in risk off before turning higher. That's why my preferred scenario is this one. This is my preferred scenario. So to draw a conclusion here, that's my preferred scenario. ABCWS ABC. Oh, this is a 3. We have a flat in the middle, and then we are now heading higher into the equal legs that come from here around 79.56, but that's going to break the channel. So I would rather go for the 618 here that comes at 78.76. That is also a 76.4 that of this leg. As most of you guys know, 76.4 are a huge level when it comes to retracement on the B wave. B wave most of the time that deep because they are continuation trend wave. So technically speaking, that's my preferred scenario on the dollar. Now, let me show you another pair in the dollar, which is, but you gotta know how to trade it. I'm gonna go when it comes to the dollar. I'm gonna use it in the euro dollar to be more specific about labor because nobody trades the dollar index. Now, this is the dollar cap. Look at this, guys. That's a lacking momentum, like 1, 2, 3, 4, 5. Momentum is lacking there. I have no idea. Now, if we go to the dollar cat, oh, what I did. If we go to the dollar cat and we put the candlestick, you guys need to see this candlestick here. Let me take all these days already. You guys know what I'm trying to say. And let's try to figure it out, the count using FIBO levels. But let's go to the 4-hour chart. Look, momentum lacking, you have no idea. Again, what you have from here, 1, 2, 3. Clear. What is this level? 50% retracement of the 3. What is, if this is a 3, so you have 1, 2, 3, A, this is W, 3 back, S, you need 1, 2, 3, right? What is this level? First, this is the 76.4 of the A, and what is this level to the upside? The 618 of the first 3, right? So, what happened there? 618 in Elliott Wave was only for 2 measures. For the wave 5 ends at 618, or wave C or Y ends at 618 of wave A. So let's play let's play bullish count. Can be the case. 1, 2, 3, 4, and then you have a 4 flat when you have 1, 2, 3. It makes a 5 here, or a double zigzag. But well, it makes it makes, yeah, I know what it is now. It is bullish count. 1, 2, 3, and then from here makes a flat B, and then 1, 2, 3, 4, 5, and then you have 1, 2, 3, 4, 5 in the cat. That's 1, and then it goes back in 3, and then we draw to the same conclusion. This is corrective. This cannot be wave 1 of 3. You follow me, Isaac? It cannot be wave 1 or 3. Let's say that you're laboring. You want to be bullish dollar cat. You say that this is 1. you say that this is 2. You follow me? Right? This cannot be 1 of 3. This is a 3-way corrective move right here. A, B, C, or W right here, W, S, A, B, C. So technically, this pair is bearish. Now, if the only bullish scenario is this, that you have a B wave, and a C wave flat, which is telling you what I've been telling you, that the dollar is going to get strong sometimes between today and Wednesday, and most likely the dollar where? From where? From here? Here? You say from here. You say 1, 2, 1, 2. Yeah, but this is a 3-way too. This is a 3, this is a 3. So now let's kick with the Fibo. Let's say now that we play in the scenario of the double. You see the bullish now. In my opinion, the only bullish is a decline and higher. Now let's play here the bearish one. A here, then you got B here, and you got C or W. Let's put the W so not get confused. And then this is A, O, S, and then when you go to the upside, you got another 3-way. So what is right here, this low is the 50%, almost 618 of that one, and this low also is related. Now, these two legs, they are equal, they are to the 618, and I believe this one also is to the 618 right there. This is corrective. Got no doubt in my mind. This is completely corrective. So this is either WS and Y when it's doing the Y to enter around this level in a double zigzag scenario when you got A, B, and higher in C, and then lower in the double zigzag, or this is a B way, and then the dollar cat is going to trade from here to the downside. And that's what, but the dollar cat is showing an enormous divergence in this move. And if you look at it on the past, it's repeating the scenario. Now, getting back to the dollar for the last time before we go to the euro, and putting the candles in the dollar because I don't want to get confused. Depends on where the market is opening now. The dollar is higher right now. We should know where we are. What I say, my conclusion is, if the dollar goes down to around this 77 area, you guys should buy the dollar with a stop right here. If the dollar goes into this area and it looks corrective, you should fade the dollar after you see that the buying. You should buy here and selling it after 5. Because remember, even wave 3 of 3 is going to have a wave 1 of wave 3 of 3 of 3 of 3. It won't be in a straight line. Now, you guys should look at this trend line, because if the Y happen, should end around that trend line, around 77, 78, 60, 79 area. That's my message. My favorite, I don't think that is the 3 of 3, but I think the dollar, a scenario change, guys, from one day to the other, from even 1 hour to the other. As of right now, that's the way I look at it. I'm ready to see tonight what's going to happen. If it does this and correct like this to the downside, the dollar should be bought against this area. Why? Because the dollar can get strong. Why? Because this leg was a three-way. That means that the dollar won't break to the downside. That means that the dollar can get higher, either in wave 3 of 3, on C, or wave C of Y. Any question about the dollar, guys? There is a lot of people right there, almost 100 people there. Please ask questions. Rafi, we go to the individual pairs. I'm talking question about the dollar, guys. Any question, any doubt that you have, guys, about what we're telling. We are for the C of C scenario. It's not clear. I understand that. We go, our favorite one is one more string in the dollar and then weakness to break the October 22nd. But we got it. But what I believe that is going to do something like this and from there. Best scenario, best way to put it to all you guys is after the next 5, the first, it's a simple game, guys. Elliott Wave is the most amazing tools that you guys can find out. Look, what we were saying on Thursday night, dollar weakness. What do we say today? Dollar strength. Why? Because the strength, the weakness in the dollar proved to be corrected. That means that this is not the top in the dollar, in my opinion. That's how you need to play it. There is a count. It's a very unlikely one that comes from, I have it, you guys can see on the service, that goes like 1, a flat 2, and weakness. That's why I'm ready to sell the dollar at the open. Most of you guys know that I'm long cable, but I understand I'm long cable with the idea to take profit in the possible C-wave scenario. I know that cable has not found a bottom yet, in my humble opinion. So, clear with the dollar. Let's move on now to the oil for a second here. 1 second. And to the S&P first. It's a very tricky market, guys. I want you guys, if any of you guys have been trading for a long time, which assuming you guys do, it's very tricky, guys. I've been trading for almost more than a decade, and this is as tricky as you can see. I can tell you all you guys that. Let me say this. For a second here. Let me erase this a little bit. This is one of the multiple counts that you guys can find in the S&P. What, like, I mean, members, you know what? We've been discussing this for the whole week. This looks bullish, but it can be bullish in 2 ways. It can be bullish when you got 1, A, B, C on the flat, and then this is the one that goes with the scenario when we enter in now the C wave of an S, and then this would be wave 3 of 3. You guys got it? Euro dollar 10. This recovery in risk is going to go the euro to around 137 and change before winnings. This scenario is going to take the euro to 138. I'm sorry, to 144, even 146 area. Nobody has the holy grail. All I can tell you this is that this is going to recover. I can tell you this is that this can be a B wave, but this also can be a C wave into and most bullish count is on the service. Let me show you guys which one is. Sorry. Most of you guys know already which one is, which is the one that take the S&P to new highs. Is this one. You go to the S&P, is this a scenario. You got where we are right now. We should be in W. We should be right here right now. And then what happened? You see A, B, C, A, B, C, B, A, B. We should be in some degrees around this area with one more leg in risk coming in. So this is W, S, Y. That's the most bullish risk scenario. How you support that? Very simple, like it is right now. What's going to happen with oil? That scenario in oil is this scenario. When you got WAB, we are in the wave 4 in the oil, and oil is going to trade to around 110, 106 area before dropping. That scenario is possible. What the market is a toss. When the market is a toss like here, remember, there is no defined trend. Technically, we can still be within the B way in risk from 2008, or we can be finished on the B way and we are already in the wave 2 or wave 3 coming down. So my best guess is that looking at the RSI right here, I believe, look, 99% of the time, this is going to happen. And in smart trader, what you guys do, after 5 here, you buy risk. After 5 here, you fail risk against this high. Like DB was telling me today, if the S&P gets to 1270, you got to sell everything you have right there. After you identify a wave 3 or 4, and you need to fade it. Why? You cannot lose the chance to get into the decline that is going to take the S&P to 450. Possible. Or if you came out to be wrong, send a scenario. Right here, you see, guys, the two scenarios on the dollar. Very clear. Either the dollar is going to go to 137 and the euro dollar, or the dollar is going to go to 144. There is no way around. There is no way around. Or you know the euro dollar that was for 142 to now, you got 5 swing. You need 7 to be corrected. That's all you need. As far as the 5 swing is there, you need to count the next. No way around. That's all I can tell you, guys. No way around. Now, that's for the S&P. It looks bullish to me. S&P bullish mean what? Dollar lower. Oh, you guys know that. Now, oil, same scenario. Oil, same scenario right here. Look. Is either 1, 2, 3, down. This is the 1.618, like we've been mentioning all over, 1.618 of A. Most of the time when you see a C way to the 1.618, 99% of the time, that means wave 3. So most important than everything is the recovery. The drop from here. That's most important than everything. From there, what you have? From there, what you have in oil is either A, B, C, W, S, A, B, C, and this is supporting the idea, but well, oil is being in his own world lately. So, but this is supporting the idea of the higher risk. Or it is 1, 2, 1, 2, and another 1, 2, and nesting. Now, what the RSI is saying? Lacking momentum. Look, RSI is bullish. That's why we favor in the scenario that the dollar is going to enter the C way. Because if you add it out, Cooper, oil, RSI is pointing dollar weakness in the third near you very soon. But before the weakness, the real weakness, if the C way is going to happen on the dollar, needs to happen at B way, another C way. That's why I'm going to go to the 8-hour labor account on the dollar before move on to the euro dollar. This is what I mean. What you have right here. Let me see. This is the right one. Okay, what you have right here, same scenario. A, B, Z, W, B. You see, sometimes I put it like that. Let me put it correctly because many people can get confused. And then A, B, and something like that. Look at the divergence. Me personally, I don't buy when I see divergence because I buy a strength. I sell a strength and I buy weakness. In this case, if you buy it right now, you buy weakness. And that's dangerous in trading. So, what do you think about it, Rafi? The momentum is lacking, but the momentum of the RSI also is supporting the idea of the flat. That's why I have to say, you guys, that the idea of the nest can be in place. Done with the dollar, done with the oil. Let's move on to the individual pairs here. So again, from here to here, best scenario from here. If it goes from here, I will feel more comfortable about the nest, about the C-way, that if you see that it goes to around 137, S&P to 1270, then you need to buy the dollar. Because if not, you can be losing the move, right? That's the point right there. Let's move on. All right, don't forget about it. I'm here. Okay, let's move on to the individual pairs for a second. Because I want to cover the euro dollar to you guys out to the point. And cable. But you guys have the idea, right? Before I get the signal back. Yeah, go euro, cable, Aussie. And then you guys can be writing. I want you guys to start writing all the questions there. And I'm going to be answering. I hope we got it from the first time. Because we got to switch this in now, guys. Got it. It's good. Now, we're going to start with the euro dollar here. Okay, here we go. Euro's trading at 35.05 now. Look, this is the chart that we're presenting to you guys on the service. That's my preferred account. When we are labeling here as A, but this as a W, but this can be also A. And I'm going to explain to you guys how. Well, you got A, B, Z. You can measure 618 of A. Right there, around that area. And then it's undeniable. The move from last week, it is a 5. Now, on the euro, this was the 50% retracement. So, if, let me put it this so you guys, because now it's fast when you move on to the individual pairs because you got the whole idea of the market already. is you see the euro going here, test the lows, and going back around 36.59, 37.18. In my humble opinion, that's the wave 3 of 3. Why? Because this is a clear double zigzag or three-way move right here. That means that the euro is not bullish. Right? Then right there, you got to set the euro even if you get stop out. Right there, what you do is you set the euro against this high. Now, if euro, and I want you guys to think in the S&P chart, it's like this, A, B, going down in Z. When the S&P is going to recovering, the euro most likely is going to recovering. Now, if the S&P extended to the equal legs, which come around 1182, what's going to happen is most likely the euro is going to drop into the D way or the C way right here to finish the 7 swing from the top. What's going to happen that the recovery in the S&P, it won't be the flat. The recovery in the S&P is going to be the C way on the euro. You follow me, guys? That's how you need to look at it. Now, that's why I would prefer the euro to do this, S&P extend on the losses to the downside if it's going to be bullish. I care less which way the S&P goes or which way the dollar goes. All I'm telling you guys is, if you see that it goes this way, that means that the S&P is going to recover from current levels, what it is right now. That means that you guys, we are for the real move in the dollar. And that means that you guys need to sell the dollar around 137.18, 136.50 against the high. Because nobody can deny that the dollar can be in the real move. I care less which way it goes. I'm just trying to play Elliott Wave aging. I'm not even a dollar bull and a dollar bear. I like trade the market. So, in my opinion is, if I see a dollar around here, I'm gonna sell the dollar around here. If I see the dollar around here, I'm gonna buy the dollar around there. That's the measure for the euro dollar. Very simple. I mean, you agree, DV? We cannot say it otherwise. That's how it is. That's black and white right there on the dollar, on the euro dollar. Black and white. If it goes right here, buy the dollar because it's gonna go to 144. Or minimum 140 again. If you see that turn from here to an extended wave 2, set the euro right here because it's going to go to minimum 124. That's my opinion on the euro. Now, what the RSI is saying is, look, huge divergence. Yeah, RSI is supporting. At this stage, with a new low, it's going to come with divergence. This is AB, euro to 146. As an ABC. Simple as that. Forget about the news in euro. That doesn't matter. This is trading. Now, otherwise, what happened? That if the RSIs go here, then you got to trace this trend line on the RSI. Right? You trace this trend line, and you're going to set the euro in the test of the trend line. That is going to come around 137. If you see the market retesting the trend line, that's the 3 of 3 coming in. That's all I can tell you. We don't have the holy grail to say at this stage which ways we go, in my opinion. Now, let me explain to you guys a new count that we're presenting to you guys. I believe it's on the daily, right, David? Yeah. That not necessarily needs to be the 3 of 3. This is the one that as of now we are adding as a preferred count. Is A, B, and Z. But we're putting an alternative. I don't know if you guys noticed it yet. Believe it's this one. Yeah. when this can be taking place. I know Rafi been saying that, good job there, Rafi, for a while, that we're still being in the D wave. I know you've been saying that for a while. And I draw the conclusion now that that can be the case. That scenario, exactly, that scenario is calling for this. It's undeniable, guys, that this is a three-way move. Now, this is the 618 of this one. Now, that's another scenario that is bullish, temporary bullish, is that a new low can be W, and the first leg, so the market is going to be here, and then the market is going to retrace in three ways and soar again to around 124. You have to contemplate, and then it's going to be a biggest recovery. You have to think that as a possible path also. But again, only a 136, 137, 136.60, 137 area before making a new low is going to deny this scenario, and it's going to deny the other one. And then you got to move to the more aggressive scenario that I don't know what is the, people keep calling the wave 3 of 3, and I want people to labeling this as an impulse, because in the dollar can be the case, but I don't see in the euro a wave 3 of 3. I would go with this one then. I didn't realize it, but I don't know how you're going to label this impulse to get into the famous, the most popular wave 3 of 3. And I'm going to bring something to the table about the triangle on the S&P. DB was all over me on Thursday and Wednesday, showing a tremendous savvy of the market, saying that when the triangle is so obvious, that never happened. Well, wave 3 of 3 of 3 is so obvious at this stage that I believe that ain't going to happen either. Don't you guys agree? Everyone is expecting the dollar get strong, and when everyone expects something in trading, never happen. So I don't know, because the euro, the most bullish I can go is that scenario at this moment, to be honest with you guys. Because, yes, from here, you can count wave 3 of 3. But what about the rest? I don't see it. So that's why I'm favoring this scenario or the previous one on the euro. And that goes with this. Let me push you the weekly to end with the euro, which is our preferred count on the euro, on the weekly chart. This is our preferred count on the weekly chart on the euro. As of right now, it's the B-way triangle. I have no question in my mind that that's the count. Now, the question is if this is the whole D or this is the whole E. Now, if it's the whole E, is when you can get into the 3 of 3. Otherwise, it's not. That's my whole point. So you have to wait there. Now, cable is very similar right here. You have either in the whole D, like it is right here, when it's gonna end D here, or if D ended here, which is the same scenario for almost everyone. Now, cable in the short time frame, this is what we see. We see a corrective. We see as a B, and possible end here, A, B, Z. You have here a clear phi, a questionable buy, an import. So you're going to match it. They are almost equal right there. If you guys notice, they are almost equal there. And then you have a deep retracement, and then you have the first leg. So again, very hard to count as a nesting I would rather count it like this, but I think that one more leg can take place. Now the question is, if this, the whole B, or if it's going to get higher. If you see cable around 159, 160, sell it, guys, against this stage right here and see what happens. That's my message. Any question on cable or euro, guys? Now, from here, in a smaller time frame in cable, it looks like they're recovering this. It was a double zigzag, A, B, C, W, S, A, B, Z, equal X, I believe that the euro did, 1.23 in cable, and then it looks corrected against this. So again, it looks like the dollar is going to get weak and strong in the open today. There is no huge gap. And then from here, we need to see it. Best case scenario for the dollar burst, that the weakness extended there. That's going to be 7 ways, and you need to fade it after the 5 of the 7 swing in the whole dollar. That's my opinion. Now, getting back to cable, right here in the 4-hour, and looking at the RSI, again, look at the divergence that we have. A new low from current levels is going to come with more divergence, making the case to be the B wave. And you see that scenario about, in every single pair around the market. Now, guys, we're going to be open for questions. We always do it like this. We cover the general market, and then we cover the most, Aussie is showing a very interesting structure also, when it's either close to competition or it's very hard to count a bearish. I know we have a count made by DB with a bearish count in Aussie, but it's very hard. Look at the RSI, it's very hard. That's bullish, guys. I'm sorry. That's very bullish. And the same with every pair. I don't want to get into repetition, but it's the same with every pair right there. So in conclusion, what we like is wait for data. In other words, yes, I go there now, my friend. It goes looking at the data. You have to wait for the data, and I will recommend, in the case of the euro, so you guys get an idea about every pair, is selling the euro around 136.5, 137 against 38.14, or buying the euro around 133 and change, 133.80. In other words, after 5 ways from 36.15, you should fade the low on the euro. After 3 ways around 136.50, you should sell the euro. As clear as water. Now, euro pound, that's a tough one, my friend. It is being very tough. And explain to you what is very tough. Because the euro pound, it did a clear structure here. Now, if you take a look at the euro pound, this low is as defined as you can get. 1, 2, 3 over here. Or this is a 5-way move. You took a look at the RSI. The low is the low. That's what I'm labeling as a 3. Now, this is what I like. I like it. 3 backs and another low, to be honest with you. But you coming out of the 3. The first leg here looks corrected, but as you know, if you trade this pair, this is the 3-way. I think that's the B that call it like that. That everything is 3 ways on the euro pound. So what I can say on the euro pound is I like it with a new low, but it can be done right here. Looking at the daily, I agree with you a little bit. I mean, what you mean 83, 86, 35? $86.15 comes when it comes to Elliott Wave. I think around 86.15, yeah, it can make another low. And I agree with you, Kevin, right there. Yeah, that's my preferred count. You see it there. Now, that's a great show because you trade 86.15 against the high here. Doesn't mean that needs to respect, because technically you are correcting this move. So 86.58 is the 50 back plus the big way high. I think, and if you trace a support line around that level, look, it's a very interesting. I would bet that should be selling around that level there. Yeah, a stop just about. I would put the stop a little bit high. You can get, and that move goes with also with a double, because there is not too much run to the upside here. Now, let's move to the Aussie yen because of the comment right there. Aussie yen is very clear, in my opinion, compares. Look, I want you guys to be honest with each one of you guys. And this pair, I always classify and follow the pairs in group. And Aussie yen, CAD dollar, Aussie dollar, New Zealand dollar, all those pairs, for me, CAD yens, all those pairs, they are the metals one. This is bullish. Don't you agree with me, Michael? Now, for me, it's bullish in some degrees. Look at the RSI. That's an RSI. That's telling me, guys, that risk is set for the move. And that's telling me also that he can go higher. It's at the 618. It looks corrective. It's a word-defined A, B, C, W, A, B, a triangle C-way, and then, look, it looks corrective in my humble opinion. It's also at, if you take the equal X, it's around the area. It's lacking momentum, so I would say it's bullish. It's like right here, guys. Look. Look at the same scenario. Look. You see the divergency? This is 131.50 on the euro. You see the divergency? It's proven to be the same thing. So I'm expecting a bounce and risk. The timing, I'm sorry I don't have the holy grail to tell you which one it's going to be, but that's what I'm expecting, to be honest with you. Exactly. It can extend a little bit, but what? Because it can go a little bit lower to go with the Aussie. Now, let me point you guys out something about the New Zealand dollar. Because in cycle-wise, the New Zealand dollar is the one that is closest to the invalidation of the 131 of the October the 2nd low or highs in the cycle. But now, let me want you, this is the count that we're following. And look, it's at the equal legs. So metals, I believe that metals, they're gonna top bottom first than the rest of the US dollar pairs, in my opinion. Now, look at the New Zealand, and taking of this level, it can be a red flag. No, I'm gonna cover gold now, Alex. And guys, there is almost 100 person right there. All you guys that there are no members, I invite you to take the try. You guys gonna learn a lot of Elliott Wave. Yeah, there is a trend line coming in on the daily, I agree. But look, Second scenario, a clear momentum divergence in every pair in risk. Now, gold, look at gold. This is our preferred count in gold. Now, this count, gold is not clear answer, is not clear at all. Why? Because all we know in gold is that most likely this is not the top. We see a three-way move down in gold here. We see a side that is calling a three-way move, but this can make a bunch of things. This can be the beginning of a triangle. This can be a regular, a flat, or this can be an ABC, WS, ABC. Why? So it's not defined. We make a great call the other day. It was around here, DV, right? That we say that gold is going to drop. That's exactly what it is. My advice to you is, if you go small, I mean, the structure is not clear. All you got is 3 and 3. Possible. I mean, we have a 3 and a 3. That's all we know. Now, this also can be a B way, and this being W higher degree, 3 more, and going higher in 3. But my advice to you is this. You need to go in gold and look at the small time frame. Now knowing what's taking place on the biggest time frame. Now in the small time frame, you got 1, 2, 3, 4, 5, 3 backs, another 5, 3 backs, 5, 3 backs, 5, 3 backs, and on. I won't buy gold, me personally, until I don't see a 5-way move completed from here. Otherwise, you can burn out. The RSI so far, there is no divergence, so there is nothing that say, and the recovery here is corrective. So I'm expecting minimum winners in gold to minimum around 1670.87. This is correctly coming out of the lows. If I'm going to sell it, I'm going to sell it with a stop at 1759. Oh, not that high. You can go with a stop at 1753. But gold is a sell, in my opinion. I say right now. This looks, why do I base that? Because this is a 5-way swing here with divergence on the low. And we got the 3 backs. And this is 1, 2, 1, 2, 1, 2, 3, 4, 5. I guarantee you that this high is the 3802 around here. You see? To the pit. So I'm expecting lowest price in gold, to be honest with you. Any other question, guys? You understand, Azar? You understand? All right. Any other question, guys? Any other pair? Okay, guys, if there is no more questions, so I think that we cover everything. The message, very simple. New low in the euro before breaking 136 was 136.14, David, right? The high. It needs to be favorable after 5. A denial of the new low and goes to 136.59, 137.20 needs to be sold with everything, you guys, against 138.14. and the same with every pair. That's as simple as you can get. S&P should trade higher this week. Thank you, Ted. S&P should trade higher this week one way or the other. And then that higher is going to take risk trade higher. Again, for the non-members right there, please, it takes only $9.99, and you guys can take a test or whatever we're doing in Elliott Wave Forecast. All right? It's right there. Visit the site. And then if you like it, you stay. If no, you take the trial. That's how it is. Okay, guys. Love you guys all. See you guys during the week. Thank you. Thanks, man.